Hello and welcome to Dohnatien Investment. This analysis is for Powell Industries on NASDAQ as of 4th of August 2026 with a share price of $212. The full report is on dohnatien.ca, a hard avoid at $212.57. Powell is a genuinely high-quality, net cash industrial with a record $2.4 billion backlog, but at approximately 44 times clean earnings, roughly twice what the fundamentals warrant, and after a fresh Q3 miss, the price is simply wrong. Do not buy across all three horizons. Let's be clear about what Powell is. It designs and builds custom electrical switchgear and power control systems for refineries, LNG terminals, utilities, and data centers. It runs a fortress balance sheet, around $633 million of cash and effectively zero debt, with return on equity near 28%. And this quarter, its backlog hit a record $2.4 billion, the first time above $2 billion in the company's 79-year history, with book-to-bill still above 1. Quality scores 80. This is exactly why the stock is tempting, but quality was never the question here. The question is price, and here the answer is emphatic. On clean, operating earnings, Powell trades around 43.9 times against a warranted multiple of about 22.2 times, nearly double what interest rates and disciplined growth justify. Even after a 35% fall, it sits in its ninth valuation decile, and it now clears the deep expensive do not buy bar. 43.9 times is above 1.5 times the industrial's guardrail, which is 34.5 times. The free cash flow yield is only about 3.1%. There is simply no version of this where 44 times is a fair price for a high single-digit grower. A 44 times multiple can be defended by exceptional, proven, durable growth. And that is exactly the carve-out the latest quarter broke. Q3, reported on the 3rd and 4th of August, missed on earnings by 4.7%. Revenue of $311.7 million was up 8.9%, but still light. And organic growth has cooled to around 9% from the surge of 2 years ago. The roughly 20% forward earnings consensus now leans on margin expansion. The miss has called into question. The stock flushed about 14% to $188, bounced to $213, and sits at its 200-day average, an unconfirmed bottom, not a clean turn. It's a deep laggard, about 20% behind the S&P over 3 months. To be fair, because this is a close call, not a slam dunk, Powell is not a broken business. If the Q3 miss proves a one-off timing slip and data center and LNG orders re-accelerate the backlog, the multiple could hold and the stock could retrace toward its old highs. The bull case is about $300, roughly 41% above today. An existing holder is not forced to sell into the low, but do not buy governs new money, and the arithmetic is against a fresh buyer. The probability-weighted fair value is about $209, just below today's price. From 44 times, mean reversion toward the $155 bear case is a 40% move, not a wobble, so the downside dominates. Now weigh the risk against the reward. The bull case is roughly 41% above today, the base case, the most likely, about 11%, and the bear case a fall of about 27%. So you are risking about 27 to make 41. So, our call on Powell Industries on NASDAQ, do not buy. Remember, this is for education, not financial advice. Always do your own research. This analysis is by Dohnatien Investment at dohnatien.ca. The link to the full report is in the notes below. Have a great day.